Good day, everyone. I am Sir S. Tejano from Bachelor of Technology in Livelihood Education 2A, currently studying at Davao Unity State College. At this juncture, I will be going to discuss the Module 3, Lesson 3. We'll be going to talk about the corporation in a business and its advantages and disadvantages. First, we must identify what is corporation. When we hear the word corporation, the first thing come in our mind is totally connected to the business. But we must dig deeper what corporation really is. A corporation, or sometimes called as corp, is a business organization that operates as a legal entity that is separate from its owner and it's treated by the law as if it were an individual person. The basic corporate structure consists of the shareholders, board of directors, and officers. A corporation can do everything that a sole proprietorship or the partnership can do: own property, buy and sell merchandise, pay bills, and make contracts. It can also sue and be sued in the court system. About 20% of the business in the United States are organized as a corporation, but they produce about 90% of the total business revenue in the United States. There are advantages and disadvantages of corporation. We will first tackle its advantages. The corporation in the business have a lot of advantages, such as ability to raise capital, where the people behind it can sell its stock and generate capital or money. A joint stock can be bought and sold by the shareholders. If the corporation needs money for growth, expansion, or other purposes, the company can sell additional share of stock to raise the necessary funds. Through selling their additional share of stock, they can earn the money that they need. If a large amount of capital is needed to start a business, the company may begin as a closely held corporation rather than a partnership. The difference between the corporation and partnership is that corporation is separated by their owners, while the partnership owners share the business risk and benefit. The second advantage is limited liability. This is where if the corporation has debt or financial problems, the owner may lose the amount of their investment, but not the other money that he or she have in the business. Only the investment will lose. Your personal asset is protected in a corporation than in partnership. The third one is the continued life. When a sole proprietor retires or dies or sells his or her business to someone else, the corporation does not end the legal operation of the business. Stockholders may enter or leave at any time without affecting the existence of the corporation. Its legal status as a business continue identified, there is still a chance that the business will continue. The last advantages of corporation is separation of ownership and management, where the owner has a board of directors to run the business using the different skills, knowledge, and experience of the various individuals. Since there is an advantage, there is also disadvantages. The first one is the complex and expensive setup. There are a lot of things to do in doing or creating corporation. The proprietorship and partnership are easy to set up. However, it is need a great effort in doing it. You must complete many forms, file reports, and adhere to many laws and regulations. Like what I said, it needs a great amount of work of organization required. Forming a corporation costs a large amount of money. Some costs of creating a corporation includes legal fees, licensing costs, filings fees, costs of issuing stock certificates, and administrative costs. The second one is the slow decision-making process. A major disadvantage of the corporation is the slowness of the decision-making process. In sole proprietorship and partnership, only a few people determine how the business is run. As a result, this decision may be made quickly. However, in corporation, especially a large ones, many different people study these issues and discuss and debate them before deciding. And those different people have own decision and plans. Some of it will have disagreements to those people behind must study in the different issues and situation. They must do meeting and do debates to be able to have the best decision, and it really takes time before the final decision. Lastly is the taxes. Another major disadvantage of corporation concern taxes. The corporation must have file corporate tax return or IRS Form 1120 Form 1120 US Corporation Income Tax Return to report the income gains, losses, deduction, credits, and to figure the income tax liability of a corporation. And pay taxes in its corporation income tax rate on a profit. The corporation is a separated legal entity. It must pay state federal income taxes on its profit. The profit of a corporation is taxed to the corporation when earned, and then it's taxed to the shareholders when distributed as dividend. And that's all the disadvantages of corporation. Thank you. God bless us all.